Time now to talk commodities. Manisha is joining in. Manisha.
Well, thank you so much for that. It's almost end of the year and we've seen volumes continue to decline, and that would happen even more as we head towards the Christmas Eve today. I want to take you through on what we've done in 2024 in sense of non-agri commodities, and I'll start with energy, where we are closing this year in the negative there. As you can see, Brent has declined even more than what the US crude prices have done, and it has been a declining spree for heating oil, coal, natural gas prices. Everything to do with crude and crude products has been on a weaker side, barring natural gas, because here the markets are still looking at sanction concerns. It is still below 5-year average in sense of inventories, and there are concerns between a pipeline flow from Russia to Ukraine passing via Europe, and is the reason you've seen 60% of gains come in for the natural gas prices. But as you can see, everything else in the 2024 has been in the negative when it comes to energy as a sector. I want to take you through precious metals now, and here is what you have better gains coming in. Gold and silver prices, more than 25% of gains coming in for this one. Can't say the same about the other PNG metals, where you have platinum and palladium prices down between 4 to 5% there. But gold with 27% of gains and silver by 23%. We have seen all-time highs into this one in the Indian markets, whether it has been about global central bank buying, geopolitics, dollar index, even as it has been trading at 2-year highs, we have seen gains continue in case of gold and silver. That brings me to non-ferrous metals now, and here as well, while we are looking at gains for most of these metals, but the markets are slightly jittery now as we get into the new year, especially with trades and tariffs and China lack of clarity, all of that keeping prices on edge there. But copper and aluminum have gained between 4 to 6%. Outperformance within the metal space clearly has come in from zinc, 13.5% of gains there. The other metals like nickel and lead actually are clearing or closing this year into the negative there. Talk about the ferrous metal prices, and here everything is in red. The steel prices in China and US have declined quite sharply, and so has been the case when it comes to steel as well. We've seen 18% decline in China and 38% of a downfall that you've seen come in for the US markets as well. Here, China was a major factor, and since we did not see good numbers coming in, the construction and the property sector still rolling under a lot of pressure, we are looking at that immediate impact coming in for prices here. Well, as I said, 2025 is going to be quite interesting to watch, because it is going to be about what OPEC and non-OPEC do for the energy markets. It's going to be about Chinese demand, EV, and it also is going to be about on what we see in sense of adoption when it comes to decarbonization. The markets will also watch out for the US tariffs and sanctions on what countries and how much, and that calculation will clearly come in by the first quarter of 2025. And then it is going to be about China stimulus, US tariffs, energy transition. There is just so much to watch out for in 2025, but all of this will have to wait until the first quarter of 2025 on what Trump does. What is the kind of reallocation that we see in various asset classes will tell us on where the money really starts to move. Dollar is going to be quite an important thing to watch as well, because we're looking at 2-year highs right now. Most of the major currencies, high-yielding currencies, are closing this year into the negative. So this is going to be an important one. For gold, global central bank buying is going to be a theme that we will want to watch. The last 3 years, including 2024, there has been near record buying there. The geopolitical tensions is going to be another thing. And then it also is going to be about central bank buying, geopolitics, investment demand, which has been a theme in 2024 with the kind of returns that gold has given you. It's something that we will carry on as a thing to watch in next year as well. I quickly want to take you through some last few plates on what the global banks and brokerages are putting out in sense of prices for 2025. This is for Brent, and as you can see, it's a big range. In any case, for this year as well, we've seen a range of 90 on the higher side and 70 on the lower side. So it has been a $20 range, exactly what we are getting into 2025 with. Citi is most bearish. They expect oversupply and higher supplies from non-OPEC as well. And then EV adoption in China has been higher. The other banks and brokerages, as you can see, are looking at prices between 65 to 80. UBS, of course, clearly seems to be the most bullish when it comes to the crude oil prices. Take a look at gold, and here everybody is bullish. The least bullish is perhaps Bernstein, and we've seen UBS talk about below 3,000, but 3,000 really seems to be the most favorable consensus number there coming forward. So that means another all-time high could be coming in for gold. Silver, while we saw all-time highs in the Indian markets, but the global market saw a 12-year highs. Next year could be a build-up on that. This year high has been 34. So we are looking at higher build-up in the next year. $38 to $40 on the higher side is an expectation for next year for the silver prices. And finally, copper should come in on your screens. And while this year saw an all-time high, But from the highs, we are down by nearly 16%. For the next year, it perhaps is looking at even more bullish. So currently, while the prices are trading at around $9,100 a ton, $9,400 is what Bank of America expects. But JP Morgan, Citi, Goldman Sachs, UBS expect 10,000 to 10,500 on the higher side for next year. So some bullishness continuing here.
Okay. Thanks a lot for that, Manisha. I know as a commodity expert, you like to sound bullish, but we are glad that you're not so bullish on crude. Thank you very much for that exhaustive and comprehensive overview.